Hi everybody, Attorney Joan Wilson here. It's Monday, which means it's time for Monday's Myths and Misconceptions about Medicare and Medicaid. Today happens to be Monday, March 16th, 2020, and we're all in the midst of trying to protect ourselves against the coronavirus. Hopefully, a few months from now, somebody watching this video may have forgotten all about what it was like. But right now it's a scary time. We spent most of the day here trying to make our office virtual so our staff can work remotely and we can still address all of our clients' needs. And I hope you and everyone you love is staying safe and healthy in this scary time. But I did not want to leave tonight before finishing the vlog for the Myths and Misconceptions. This month, we're on month number 3, and myth number 3 on the list here is I'm allowed to gift $15,000 per year to my children without penalty. And I can tell you, I think this myth is probably the one that catches people the most. Most people have heard that they can give money to their children without having to pay taxes on it. A lot of people think it's $10,000. That's what it used to be, and it was that for many years, and it's gone up slowly over the last few years, and this year it's $15,000. But it's not true that you can gift that without penalty, and the myth and the reason why that's untrue is those gifts are only excluded for gift tax purposes and not for Medicaid planning purposes. So what the law is that you can gift $15,000 per person. It doesn't have to be your child. It doesn't have to be a blood relative. You could give $15,000 to every single person you know per year, and it falls under the gift tax exclusion, which means you don't even have to file a gift tax return to report that. If you gift more than that, you have to file a gift tax return and report your gift to the IRS, and it'll chip away at your lifetime allowance of giving. But if you give $15,000 to each of your children or to each of your grandchildren, and then within 5 years of making that gift, you need to apply for Medicaid services through the state of Connecticut, the Department of Social Services is not going to exclude that gift. It falls under a different law, and there's a different department that's reviewing it. So it could get people into trouble assuming that they can make those gifts and it won't disqualify them for Medicaid purposes. So if somebody applies for Medicaid and the Department of Social Services looks back in their history, in the 5-year history, and sees that there's $15,000 gifts, that is a penalizing gift, and the state will not pay for your services if there's no excuse for making that or you haven't received anything in exchange for that. Any transfer that you make, the state wants to see that you got something in exchange for that, because they don't want people to just give their money away and then apply to the state to have the state pay for their care. So it makes sense for everybody else. It makes sense for all the taxpayers of the state. We don't want people to just be able to give away all of their money and then apply for Medicaid to pay for their long-term care needs. But it does trip people up because of this gift tax exclusion that so many people know about. So for Medicaid planning purposes, if you have made any gifts that you don't receive anything in exchange for, even if it's under the $15,000 a year per person, it could cause problems, and it's something to keep in mind when you're making gifts out to children or to grandchildren. If you have any other questions about that, we can always help you with Medicaid planning, with long-term care questions. So give us a call. We are available. We are answering the phones. We are answering emails. And again, I hope you all stay safe and healthy.